SMEs employing between 5 to 250 people with capital needs ranging from $20,000 to $2 million struggle most when seeking financing, according to a new report by Intellecap. Nisha Dutt, the company's CEO, joins us now to unpack this report. Now, you've come up with this report talking about challenges that Kenyan SMEs are facing, especially in financing. Right. And you're talking about a missing middle. Let's start by defining that. What exactly are you referring to?
So for us, the way we think about missing middle is, people who don't get access to finance really. So, because if you look at the spectrum of financial inclusion, you have microfinance companies on one end, and then you have banks. So microfinance companies are able to cater to a segment up to, let's say, 10,000. And banks only kick in at, 500K or so. So this is the missing middle really. Nobody finances companies between this range, between a 10K and a 500K range.
Dollars.
Yeah, dollars, yes. So that is really the missing middle for us. And that's where we feel that a lot of financial inclusion initiatives must be targeted.
Now, the contribution of SMEs to this country is not in question. We are looking at 80% to employment, 20% to GDP. Why is it that still financing is a big challenge? We talk about this over and over again, that SMEs are not accessing financing. Why is it still a challenge?
The challenge for SMEs comes both on the equity and the debt side. Equity because there aren't enough people who think that they can take a risk and take a bet on SME. On debt side because they feel that the cash flows are not certain. So that's why I think somewhere people always still perceive SMEs as a high risk segment. This is quite unfortunate given their contribution to economy, but in investor and bank mindset, banks and financial institutions, we haven't been able to shake that impression where people think of SMEs as a credit-worthy segment. They want to lend to them, but they want to lend to them very cautiously. They don't see them as equally credit-worthy as, let's say, a large corporate or a high net worth individual. So generally when it comes to prioritization of financing, SMEs end up catching the wrong side of the equation typically. And I think that's exactly the thing that we need to change.
You mentioned of high risk. And of course, that's a reason we keep hearing when they don't get financing. Is the responsibility to de-risk just lie with the SMEs themselves? Do other people play part in this?
Both sides have to come to the party, right? I mean, everyone has to walk their distance. So I think in SMEs, it's more important. So one of the highlights of our report was also where we found that almost 40 or 50% of the SMEs don't even access credit. Yeah. So if you don't access credit, then banks are never going to have credit models that they have developed. So let's say that you are a quick service restaurant, and if you are never accessed credit, then banks don't know how to assess your credit worthiness. So I think so to that extent, it's important for SMEs to access formal finance a lot more, at least access, or at least approach it, so that people are able to build credit models on who you are. So in that sense, I think the onus is definitely a little bit on them to make sure that they come forward a lot more and come into the formal financial economy instead of being on the fringes and always trying to access informal sources of finance. And it's important for, I think, financial institutions to make the same effort in, understanding who these people are and what their credit and, financial needs are.
Now, talking about financial institutions making effort, the financial sector in Kenya today, especially banks, it's interesting because now you have an interest rate cap, coming on board. Kenyan banks have committed 30 billion Kenya shillings that they want to lend to SMEs at low interest rates. Do you think there's tangible contribution to the need for financing that's in the market right now?
I think in terms of signaling, it's amazing signal from the government in a way where they have said that SMEs are a high priority sector for us and lending needs to happen. So I think in signaling, it's an excellent story. But with interest rate capping, often what happens is that banks then are not able to assess risk. Actually, you are not letting them price the risk while lending. So let's say that if I consider you that you are a high risk candidate, I might still lend to you as an institution if I'm able to charge a risk premium. But if you have capped my interest rate and I can't charge a risk premium to you, then the likelihood is then I will not lend to you at all. Yeah. So there is a slight risk of that happening. And again, I think one of the things that is not clear, at least from this regulation, is that when you talk of interest rate cap, you need to think that is it for short-term loan, is it for medium-term loan, is it for long-term loan? and where should the cap be applied. So I think it needs a lot, it's very nuanced actually in that sense. So some more nuances need to be worked out. But I'm hoping that there is a lot more commitment at least. At least there's a clear signal that SME is a very important sector and it needs to be, invested in.
Now, the other players in this field looking at venture capitalists, looking at private equity investors, and according to your report, they are moving quite a significant amount of money. VCs are moving 93 million US dollars as per your reporting since 2010 from your report. Private equity investors are moving up to 862 million. What are they looking for? These the VCs and the PE funds, what are they looking for in Kenyan SMEs?
So typically in venture capital and private equity, what they look for is high growth enterprises. You almost have to be able to do a hockey stick. So they are looking for a hockey stick growth. I think in sectors that we have seen, they are interested in agriculture processing sector. So like, not core agriculture, a seed company, but let's say that, agro processing industry. Fintechs are a big interest to PE VCs. Then again, so are healthcare. Healthcare has been on their radar for a long time. So I think some of these industries are getting a lot more money than others. Again, given that investors always have an exit horizon and a certain period in which they want to make their return, a technology component is almost critical. I mean, we are not seeing a lot of activity in core business. So we are not seeing like financial services. We are seeing fintech. We are not seeing pure healthcare service models. We are seeing health tech. So we are seeing always that activity is happening at the intersection of technology and a core sector.
Talking about the interest, of course, you said fintech is one of the major areas, but the reality on ground is that we have a lot of SMEs in manufacturing and agriculture. Why are these sectors not as attractive for the investors looking for the SMEs in that space?
The reason is that a core agriculture enterprise or a manufacturing enterprise, these businesses take time to scale. They can be profitable, they can be extremely, businesses that can be really solid foundations of an economy, but these are not sectors that can scale fast. They need a lot more resources and they need a lot more time to actually come to a certain scale. And when you think of it from a venture capital perspective or a private equity perspective, they need businesses that can scale in like 4 or 5 years. And they, right from the point I put the money, I have to be able to generate an exit within 4 to 5 years. So that's why unfortunately traditional businesses don't make it on the radar of investors because they are looking for high growth enterprises.